So why is everyone talking about Palantir stock? Well, in this video, I'll go over the details that has the investor community abuzz with Palantir. Starting with the CFO, David Glazer, saying that in the third quarter, they achieved the third consecutive quarter of GAAP profitability and second consecutive quarter of GAAP operating profitability, generating 28 million of net income and 10 million of operating income. If you don't already know, GAAP stands for Generally Accepted Accounting Principles, and it's the framework that companies in the US have to follow when they're reporting their financial statements. You'll also hear a lot of companies report adjusted GAAP, where they take a GAAP figure and they adjust it to make their report usually look more favorable to investors. Not all the time. Sometimes companies do sincerely adjust their numbers to make them look more comparable, because you'll sometimes have numbers that are one-time events that are not likely to happen again. And when you're comparing, let's say, this year's first quarter with last year's first quarter that had a one-time event, and now you're looking at a year-over-year comparison, and the numbers are all wonky and they look all out of whack because one number is like 1000% higher than the other number, and so you sometimes get adjustments to even out those things. But more often than not, when companies make adjustments to their GAAP income statements, it's to make their statements look more favorable as an investment. So I always caution investors not to look at adjusted figures and just look at the GAAP figures that companies report. And that's why this was so impressive from Palantir, because they delivered 3 straight quarters of GAAP profitability, right? No adjustments, just GAAP profitability, profits on the bottom line, 28 million in net income and 10 million in operating income. And if you're wondering why their operating income was lower than their net income, it's because Palantir benefited from a great degree of interest income, which comes after operations. It's not counted as operating income. Palantir has over $3 billion in cash, and so when they invest that in government bonds or certificates of deposit, they get really strong interest income, right? Like really strong. 5% of 3 billion is north of 150 million in just interest income for the year for Palantir if they are to invest that all year at 5%. Moving on, so they generated 533 million in revenue, which was up 13% year over year and 2% from the previous quarter. Double-digit growth was impressive from the company because enterprises worldwide have pulled back on investment, on spending on the types of services that Palantir offers, because they were afraid of an oncoming recession. And so to deliver 13% growth in this type of macroeconomic environment was impressive, and it had a lot of investors excited. Palantir's trailing 12-month revenue per customer from their top 20 customers increased by 15% year over year to 53 million per customer from their top 20 customers. And to me, this has twice the significance, right? One, yes, it's more revenue and more profits for the company. But secondly, what it does is it demonstrates to me that Palantir is delivering value in excess of what it charges customers. If customers are paying Palantir $53 million, they've got to be getting something in return that's greater than $53 million in value. Otherwise, they wouldn't be spending that much money with Palantir, or at the very least, they would be reducing their spending with Palantir, right? They wouldn't be increasing it after they spend nearly 50 million, then increasing it higher. The only reason companies would increase that is if they see great value in return. And so that demonstrates to me, as an analyst, as an investor looking from the outside in, that Palantir's services are valuable to customers. And so that tells me that when they sign new clients, when they get new customers, which we'll talk about next, that shows me that, okay, it's most likely that these customers are going to stick around and over time increase their spending with Palantir because they're going to see firsthand the value that Palantir provides. And so anyone, right, when you go to spend $100 and you feel like you got $150 in return in value, you're probably going to return to that source and spend more money with that source, right? Because you spent 100 and you got 150 in value, right? It's no different in business. If anything, it's even more in business because they want to continue to do that because that will increase value for shareholders. So customer count increased by 38% year over year to 421 customers. And given the fact that Palantir demonstrates growth in spending from existing customers, this is just great news, right? Because now they've got a greater base of customers to serve, and as these customers realize the value that Palantir provides, they're likely to increase their spending over time. So you can understand why so many investors are talking about Palantir stock. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.